Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Chan, you're watching Indian Open. Let's go straight to the headlines at this hour. Marred by glitches in electronic voting machines, the third phase of Lok Sabha elections witnesses a 66% turnout. The Reserve Bank of India infused nearly 35,000 crores of liquidity through a second long-term forex swap auction. The central bank will inject an additional 25,000 crores in May through open market operations. Ultratech, Bharti Infratel and Indiabulls Housing Finance are the nifty companies that will report their quarterly numbers today. The senior-most judge of the Supreme Court, Justice S.A. Bode, will lead the panel that will inquire into sexual harassment charges against the Chief Justice of India. The other members are Justice N.V. Ramana and Justice Indira Banerjee. And the world markets are not an unhappy place. That's the other key headline for the day today. Well, US going to China is the other one as well. Firstly, though, let's take a look at how the global trade setup is looking like. Buoyed by positive earnings, the S&P and the Nasdaq hit record highs in trade yesterday, inched up to 2933, so crossing the 2930 mark for the S&P 500. The Nasdaq too inching up about 1.3% higher, and therefore the optimism in the US markets was palpable and stayed for the better part of the trading day. The argument that a lot of people are giving is that the fear was that 2019 will not have good earnings. Now that 2019 is having good earnings as well, while the US markets may seem overstretched on historical valuation parameters, the S&P 500 is not at stretch valuations. If you look at the top half of the chart, the first chart of the two charts, which is the white and the blue line chart, the blue line shows the current valuations, the white line shows the average valuations, and therefore valuations for the US markets are not setting off alarm bells as yet. That is a thesis that people are working with, and as a result of which the optimism out there in the US markets continues to stay and be buoyant and helps the other world markets as well. What might help the other world markets as well is the fact that the trade talks resume on April 30th. In the last 2 hours, amongst the news flow that has come out is that the US delegation, led by Robert Lighthizer and Steven Mnuchin, will move on to China, and from April 30th, the trade talks will begin. So that's the positive thing. What is the negative thing? Dollar index is near 11-month highs. Typically, when dollar index inches up, it's negative for risk assets, including equities. And this time around, there's no reason for this to be different. We'll just wait and watch if it indeed does had an impact or no. And of course, crude continues to trade higher. Brent, NYMEX both remain elevated. And from an Indian perspective, that is not good news as well. So these are the factors from a global perspective, which might well have a bearing on what world markets do and thereby what Indian markets do as well. Watch out for the dollar index that particularly has an uncanny record of playing a party pooper when it inches up. However, what's happening in trade for our markets? The Nifty stayed in a range. The losses were led by the rate sensitives in trade yesterday. The Nifty 50 marginally off in the session yesterday. VIX remains elevated, and that is a key monitorable as well. However, for today's session, amongst other things that we see, we'll probably look out for the base metal and the aluminum companies as well, because aluminum is trading at almost 5.5 month highs. So maybe index stocks like Hindalco and Vedanta could be active in the session today. Flows trickling down, though. We have a negative number, lo behold, from the FIIs, 237 odd crores. Not reading too much into it because it's a small number. Remember, the number on Monday's session as well was a paltry 97 or 98 odd crores. So the flows are just thinning down a little bit, but well, that's to happen after a fabulous month of March and better part of April seeing positive flows. At some point of time, FIs will also take stock of the situation and maybe trickle down. So a negative number, not a very large number, so could have been any other day. Let's wait and watch what happens during the course of the next few days. However, what's to be watched today? I think that's the key thing, right? First, during the course of the day and maybe post-market as well, we'll watch out for a few key numbers. Earnings season for the Nifty well and truly starts from today, because the next 3 days we have a bunch of results coming out. So for today's session, Bharti Infratel, Indiabulls Housing Finance, Ultratech Cement are some of the key numbers that one would be watching out for. Amongst the mid-cap names, Hexaware would be an important IT number. ICICI Prudential Life Insurance kickstarts the insurance players' earnings this week, because today is ICICI, tomorrow is SBI, day after is HDFC Life, so that's important. And Mahindra Finance from the NBFC space would be important. It will also be important from a perspective of auto financing, because they finance Maruti vehicles in a big way. So it'll be interesting to see what Mahindra Finance does in its quarterly performance that they report today. However, what are the stocks to monitor on open? That's the key thing. Now, Lupin is a very interesting one because it had a fairly upbeat session in trade yesterday, was up about 4.5%. Now, we learned that the Indore Unit 2 facility has been classified as an official action initiated. The plant is anyways under the warning letter by the US FDA. This is a bit of an ouch moment. Let's wait and watch how Lupin reacts in the session today. The guidance for margins has been lowered by Sterlite Tech. Revenues, though, extremely buoyant, 111% higher the revenues, and that was really the standout part for the quarter. Margins did contract to 17.6% from 26%. However, the operating margin guidance has been lowered to 18 to 20%. The heartening part about the margins was that the products business EBITDA margin continued to be at 25-26%. They've guided for these numbers to remain at this fashion in such volatile times. For the product business margins to remain at these levels and guided at these levels is a positive. Don't quite know which way the stock will react because there are both pluses and minuses in these numbers. Important mid-cap name. Let's wait and watch how it reacts. However, it was a weak quarter for ICICI Securities. Revenues fell about 20%. Net profit was down about 20% as well. CLSA, however, believes that revenue sharing with ICICI Bank can lift growth. Is the pain in the price? That's the big question for ICICI Securities. But if it were to react to numbers today, it should react negatively. Bank of America Merrill Lynch has initiated coverage on Crompton Greaves Consumer. The buy rating, target price of 267, implying a 13% upside. They believe there's a potential to scale up in new segments like water heaters and coolers for CG Consumer. Let's wait and watch if this one has any kind of reaction at all. And lastly, Sasken, while it came out with numbers, I think the important announcement was the buyback, 20 lakh shares or 11.7% of equity at 850 rupees per share. That's about a 20% premium. Let's wait and watch if the stock has some positive reaction to the results and the buyback announcement. So a whole host of stocks that could react. There's some terrible numbers too, Sorel Infra and the others, which we'll talk about during the course of the day. But let's tell you what's lined up on First Word today. Cost pressures hurt ACC in the March quarter. Will Ultratech earnings reflect in the same way? Nikki Mirchandan will tell us what is expected from Ultratech and what to make of ACC. But Marico may benefit from input cost tailwinds. Agam Vakil will look at how some key commodities have moved to tell us the impact on Marico. MSCI indices are due for a rejig next month. Darshan will join in to tell us about the possible changes. And even as the US withdraws Iran oil waivers, Saudi Arabia may not immediately make up for the shortfall. Stephen Stafnisky of Bloomberg News will bring us that exclusive. Let's start off with cement. ACC numbers came out. It's not been the best start for the cement company earnings. As I said, ACC came out. It failed to meet estimates in the Jan to March quarter. The pan-India player, which was supposed to ride on the back of strong cost-saving measures, failed to do so in the quarter gone by. Nikki Mirchandani tells us why. Nikki, good morning.
Good morning. ACC has clearly disappointed the street and the cost-saving measures apparently that we've spoken about yesterday, about the diesel cost, about the axle norms, the freight cost. They've all not seen. I mean, we do not see all of that reflecting in the financials of ACC, which makes us worry that now even Ultratech and Ambuja Cement, for that matter, could replicate the same trend, because even if there is an uptick in realization, if cost-saving measures don't reflect, we wouldn't see a good quarter coming in for cement companies. But then I'm going to start off with the basic numbers first for ACC, where the revenues are up by 8% for the company at 3,919 crore, as compared to an estimate which was pretty in line with what the street and the Bloomberg consensus was estimating. Net profitability of the company is up by 38% at a number of 338 crore. In line with the Bloomberg consensus estimate. EBITDA, that's where the disappointment lies. 8.1% uptick, the number of 531 crore compares to that of 491 crore in the corresponding quarter, way lower than what we were estimating. A 600 crore was what Bloomberg consensus was working with. Margins to an extent have shrunk at 13.5% as compared to 13.8%. Realization up 2.8%. EBITDA per ton up 2.3%. we saw power and fuel cost as a EBITDA per ton, that rising to almost 1% or 0.1%. Now remember, we were estimating a decline coming in on those numbers, and these numbers have actually shot up. That's an uptick of 0.1%. Freight and forward cost again rose by 0.23%. The industry as a whole was estimating a 3 to 4%, or rather a 3 to 5% decline in these numbers due to change in axle norms. That's not reflecting. Raw material cost also has shot up for the company. These three parameters combined together have weighed on the EBITDA per ton performance, even as the realizations were in line with estimates, because South and the Western region, where the company is essentially present, that's where you saw the gains coming in, but then they were offset by the higher operating costs that the company registered. And in fact, Neeraj, if we could compare what we were expecting ACC to do as compared to that of Ambuja and Ultratech, the other pan-India players, we were expecting the higher margin expansion to come from ACC. ACC, in fact, has delivered a slight amount of contraction coming in the margins, which clearly makes us feel that even Ultratech could,
What could be that one differentiating factor, Nikki?
Between ACC and Ultratech?
Yes.
I think the change in geography is because Ultratech, relatively as compared to ACC, now ACC is essentially present in South and the Western region. Ultratech also has its presence in the Central and the Northern region, where the price hike to an extent have happened. Cost-saving matrix, if they don't play out, realizations could be the only differentiating factor, and also the volume growth, because ACC was, in the last 2 to 3 quarters, they've been disappointing in terms of volume growth, and this time around also the story was expected to be no different. So it's just the realization which is expected to be different for Ultratech, if at all that would be the case. And also, if I could read out what we're expecting in terms of Ultratech revenue, we're expecting a 14% uptick there. In terms of EBITDA, we're expecting a 11.5% growth. Their margins at 18.5% as compared to 18.9%. Profitability of the company is expected to go higher by as much as 8%. Now we're seeing a difference between that of the EBITDA and the profitability, a little lower profitability, mainly on account of the higher depreciation and finance costs that the company has been bearing out after the acquisition of JP. So clearly, bottom line to an extent will be way down, but then from the performance. But then otherwise, two important parameters, that's the volume and the EBITDA per ton, is expected to perk up for the company, given the kind of cost matrix, cost saving optimization measures that we're expecting from the company as a whole.
Okay, Nikki, thanks so much for putting that into perspective. I tell you, with the way brokerages have been talking about an uptick or possible uptick in cement stocks because of various factors, we need a good earnings season. ACC hasn't quite done that. Let's hope that the others manage to post a reasonably good quarter. Let's wait and watch. We'll get to know in some time. Thanks, Nikki, for that. The decline in key input prices like copra and coconut oil is likely to improve Marico's performance. The consumer firm may be able to arrest the fall in its margins. Agam Vakil is standing by to tell us about the tailwinds and what could happen ahead. Agam, now this has been on for a while. The last time Saugata spoke to us, he kind of referred to this as well.
Yes.
Why is it standing out now?
It's standing out because there is more and more supply in copra, and that has actually led to, well, fall in prices, and that of course in turn means an improvement in your gross margins. So to take it through the
Agam, sorry, Agam, we just can't get your audio clearly. He'll just try and do that. But keep in mind, I think one of the reasons why this could be happening is because copra prices had risen quite considerably in the build-up to maybe the Jan, Feb, March quarter. Now, when we spoke to Saugata then, he'd kind of referred to that, and therefore, because that tailwind has continued, it might be a big thing for Marico. Agam, would that be a fair assessment?
Yes, it would be a fair assessment. So, as I was suggesting, we've seen copra prices fall by as much as 19% on a year-to-date basis, and this is for the fourth quarter, and that will mean a substantial improvement when it comes to, well, your gross margins, considering about a good 40 to 50% of Marico's input costs come from copra. Copra's price in Calicut fell to as much as about 111 11 rupees per kg, and that of course is a big positive for Marico. We've been talking about this for the past 3 or 4 quarters now, considering the rise in the copra prices in the year before that, and that of course the advantage has played out to a certain extent over the previous few quarters. Not so much for the last quarter, that is the third quarter, but if you consider the gross margins over the span of the last 2 years, you'll notice that there has been a substantial drop in the gross margins for Marico, but there's also been a little bit of an improvement in just the last couple of quarters. So there is this tapering of contraction when it comes to gross margins, and this particular quarter we are likely to see an improvement and expansion, largely owing to the fact that world copra prices have fallen even further. But if you leave this particular equation aside, that is a good 40 to 50% of the raw materials aside, there are also a lot of other factors which are playing out in favor of Marico for this particular quarter. First of them is Cochin coconut oil, which is down 15%. For the fourth quarter, on a year-on-year basis, we've seen liquid paraffin oil prices come off quite substantially, down around 3%. Again, year-on-year, this is something that is used in cosmetics, and also HDPE, which is used in packaging of a lot of these products, that has come off by as much as 9.5%. Do remember that while some of these inputs are linked to crude, they do move with a lag. So for now, we're not likely to show any impact when it comes to Marico. And if you take all these factors into consideration, we could just very well see an expansion in gross margins for this particular quarter, and something that could aid profits going ahead. Keeping an eye on that, let's not forget that the company is already guided for a pretty stable fourth quarter in its quarterly update recently. So if you take all these factors into consideration, we're likely to see a better operating metrics for Marico for this particular quarter.
Well, the question only is, can Marico still beat expectations? Because the expectations are already set, as Agam said. Let's wait and watch what happens. Agam, thanks so much for putting that into perspective. That's tailwinds for Marico for you. Some developments that could happen. MSCI indices are due for a rejig next month. The new composition after the semi-annual review will be announced midway for changes that will be effective from May end. Darshan Mehta is standing by with the probable inclusions and exclusions put together by Motilal Oswal. Darshan.
Yeah, so basically why MSCI firstly it's important is because a lot of these benchmark global funds, they don't track individually, they don't track any of the stocks. So what they do is they map their share holding pattern according to the MSCI. So that is why it's important. Now on 13th of next month is where the MSCI probably rejig will happen, and it will be effective by the end of the month. Now what are the possible additions, the counters that will come in according to Motilal Oswal? There is a high possibility of the insurance theme coming in. So ICICI Lombard, HDFC Life, ICICI Pru Life, over $100 to $200 million of buying will happen in these companies. The probability is the highest for ICICI Lombard and HDFC Life. The other two companies are Bandhan Bank because of the corporate development that has happened, and SBI Life. So basically it's insurance and banking probably which will make in their way as far as this MSCI rejig is concerned. Now if you're looking at some of the possible deletions that could happen this time around, counters like a Cadila Healthcare could go out. The outflow probably will be $61 million. The probability is medium. There is also a low probability that Tata Power may go out. $60 million of outflow will come in. How have stocks usually reacted when the MSCI happens? In terms of additions, they go up by anywhere between 0.5% as far as the MSCI changes are concerned in the past one. The deletions are much important. They drop on an average by almost 5% post the announcement that comes in. So that's something that we need to watch out. It'll take a month, but these are the counters that you need to watch out.
Okay, so some things to monitor. Keep that at the back of your mind. That's all that we're trying to say, but important. Darshan, thanks so much for putting that into perspective. I think something that everybody's watching is oil prices. They have remained near their highest levels in 2019 after the US withdrew waivers to countries importing crude from Iran. Sources tell Bloomberg that Saudi Arabia does not plan an immediate increase in output to make up for the shortfall. Stephen Stepchinsky of Bloomberg News reports.
sources in the government are saying that they're tentative about raising output, to say the least. I mean, there are a few reasons for that. You know, last year the Trump administration said the exact same thing. They came out and said they wanted to move Iranian oil exports to zero, and they wanted Saudi Arabia to help fill in that gap by boosting production. Saudi Arabia listened in 2018 and boosted production to record highs. But the Trump administration sort of pulled the rug from under Saudi Arabia and decided to issue these waivers, allowing 8 nations to continue importing Iranian crude. That, of course, led to a massive drop-off in the price of oil, and the Saudi government was burned. So this time around, they said they want to more wait and see. They want to see the Iranian output actually fall. They want to see exports fall before boosting their production. At the same time, they made a pact with Russia and other OPEC nations to bring down and cut production by millions of barrels a day to try to bring balance to the market. So by boosting their output, that could potentially hurt their relationship they built with Russia over the last few years. There will be an OPEC Plus meeting with Russia next month, and also an official meeting the month after that. So perhaps we'll see some more kind of direction as to where Saudi Arabia will go after they meet with the partners in the Middle East as well as with Russia. China has been the biggest pushback to the Trump administration. They said that the U.S. government is kind of stepping outside of lines. At the same time, you're also seeing Turkey echo that message. Now, while the governments in South Korea, Japan, and India said that they're going to work with the U.S. government to try to potentially extend these waivers or try to talk with them in some sort of negotiations, the companies, the importers of the crude from Iran in China, in Japan, and South Korea, and India are already looking at other options. They see the painting on the wall. They see that this is going to stop the exports from Iran. It's going to put a lot of pressure on them. So the companies are already looking at other places, and places that they're looking, of course, as I mentioned before, is Saudi Arabia, as well as the United States, to say one. So while the governments in China might be saying something somewhat competitive towards the U.S. government about what they've done, the companies are definitely looking for different options going forward.
Well, it'll be interesting to see which way the die rolls on to over the course of the next few days. Mind you, for EMs by and large, while we may want to think that it's negative, it's not always the same, because if you look at the 5-year correlation coefficient with crude oil prices for even currencies and thereby economies, for the ruble or the Colombian peso, they have benefited from the recent oil upticks, and therefore markets like Russia or some of the other EMs might actually benefit. Yes, India loses out and we're bothered about India, or some of the other EMs might actually do well. So you've got to keep that at the back of your mind when you're looking at the world markets. But unequivocally, higher crude prices, negative for India. Enough and more people have talked about that. It'll be very interesting to see once the Iran date goes away, what happens. Zero waivers, and what do countries like India do? That's the key question. We'll get to know the answers in a few weeks from now. That's all that we have on First Word today, though. Lots more lined up on Indian Open. We discuss markets and macros with Ajay Srivastava of Dimensions Corporate Finance. 66% voter turnout. What's the implication? Ajay will be best placed to answer that from a market's perspective. Mahesh Iyer of Thomas Cook Johnson to speak about the trends of the holiday season, analyze factors at play in the chemical sector with Rohan Gupta of Edelweiss Securities, and then decode the March quarter earnings with Anupam Jindal of Sterlite Technologies. But after this break, a full tilt towards the day's trade.